Coming up this month, Manchester's draw on London investors, the power of online reviews, and our plans for 2016. Hello and welcome to January's market update. Stamp duty rates for buy-to-let investments and second home purchases are likely to be the biggest drivers of market sentiment as the new year kicks into gear. The Chancellor set out new policies for the lettings market in his autumn spending review, and as a result we've registered an increase in purchases from investors, many of whom are trying to get ahead of the changes before they come into effect in April. So how has the landscape changed, and will it produce the effects that the government wants to see?
In recent years, buy-to-let has been a growth area of the market. Low interest rates, pension reforms and increased rental returns have contributed to lending increasing on second homes by up to 60%. The problem is, many of the properties which attract landlords are also priced within realistic reach of first-time buyers.
With the government's mandate to help young families gain a step on the property ladder, they now feel this additional competition at the lower end of the market is counterproductive. So it plans to redress the balance. The intention is to add a 3% stamp duty levy on all buy-to-let purchases from April 2016. But Head of Lettings Tony Singh Raud believes the impact such changes will have could be negative for the rental market across Manchester.
The stamp duty is going to be increasing by 3%, which basically means that on an average house price of $200,000, it's going to increase the purchase price by £6,000. Now, the problem that we find with that is that obviously we're going to find that a lot of investors are going to invest now, and then in the future, it just means that the rents are going to increase on rental property. So investors are going to be looking to put their their increases onto the tenants.
Overall, the market is expected to increase by an average of 6.1% in 2016, and many investors argue that the lack of housing stock is the largest hurdle for first-time buyers, not competition from landlords.
Well, I think the Chancellor, what he needs to do is, instead of penalising investors like this, is to simply put his time and effort and money into rebuilding new property to put onto the market.
Reaction to the autumn statement created a surge in activity which is expected to continue into the spring. Interestingly, we have noticed that most of the inquiries are coming from London investors, who are attracted by the yields still on offer in Manchester.
So if you are looking to get involved in the buy-to-let market before the changes take place in April, please do contact our lettings team on 0161 747 9379. Next, we'd like to congratulate our property consultant Abigail Lloyd and our marketing advisor Jack O'Sullivan, who both received 5-star customer feedback from one of our clients in December. Internet reviews of products and services are becoming increasingly popular, yet many people still don't know that every estate agency is listed on a website called All Agents. We highly recommend having a look, as it's a great place to compare different local estate agents when considering selling your home. It highlights where you'll find the best customer service and provides a platform for clients to leave their honest feedback. You can read all our customer reviews by following the links on the homepage of our website. And finally, throughout 2016, we'll be bringing you a new video series to demystify many common issues people face when buying a new home. From understanding boilers, gas and electrics to identifying different types of damp, each month we will give you advice on what to look for and where you can find the right answers. Well worth tuning in for. That's everything for the new year. Thanks for watching, and don't forget you can subscribe to our YouTube channel by clicking on the link below. See you next month.